What's the best way for a total beginner to invest, say, just $100 online? It's a question we hear all the time. So you know what we did? 4 years ago, we kicked off a little experiment to find out for real. We took $100 and put it into 5 totally different investments. And today, we're going to see how it all played out.
All right, let's get into it. Here's what we're looking at. We've got 5 contenders in the ring. Everything from the exciting world of individual stocks all the way to the old reliable gold. We're going to see how every single one of them did over these 4 years, and then we'll deliver the final verdict. Who's going to be the champion? Let's find out.
Okay, before we jump in and meet our 5 contenders, we've got to lay down the ground rules. I mean, how are we actually judging them? We need a level playing field, right? A solid framework to see who really wins this thing. So here's how we're going to score. We've got 5 key criteria. First, how hard is it to even understand this stuff? The learning curve. Second, can it actually make you money while you just sit on it? You know, passive income. Then, are there any sweet tax advantages? Super important. Fourth, and this is a big one, how risky is it? Like, what are the chances you'll lose your money? And finally, the moment of truth. What's our original $100 actually worth after 4 long years?
All right, let's kick things off with contender number 1. This is the one you've definitely heard about, maybe even dreamed about. Picking individual stocks. This is the big leagues, right? High risk, high reward. It's all about owning a little slice of a company you really believe in. I mean, let's be real. It's pretty much putting all your eggs in one basket. You are making a bet, a big bet on the future of one single company. Now, if that company takes off like a rocket, well, you're on for the ride. But if it crashes and burns, your investment goes down with it.
So, yeah, picking stocks isn't something you just do on a whim. It takes work, a lot of work. You've got to do your homework, dig into the financials. But there are some upsides. You can get that passive income from dividends, which is great, and there are some really good tax breaks you can get. But let me be super clear, the risk is high. So to really drive home how much luck plays a role here, did we spend weeks analyzing spreadsheets to pick our stock? No way. We did something much more scientific. We put on a blindfold, and we threw a dart at a board full of company names. And the winner? Thwack, Samsung. And this is where things get kind of crazy. Our random dart pick, Samsung, ended up losing us money. Our $100 turned into less than 68. Ouch. But look at this chart. If that dart had just been a few inches off and landed on, say, Nvidia, that same $100 would have exploded to over $900. It just goes to show you, it's a total game of chance. Picking that one huge winner is incredibly, incredibly tough. Okay, moving on from the stock market roller coaster. Our next contender lets you get a piece of the real estate action, but without needing, hundreds of thousands of dollars for a down payment.
So what in the world is a REIT? Well, think of it like this. It's a company that owns big properties that make money, like office buildings, shopping malls, that kind of thing. And when you buy into a REIT, it's like you're pooling your money with thousands of other people. Maybe you own a window, I own the front door, someone else owns a few bricks, and together we all own the building and get to share in the rent money that comes in. Pretty cool, right?
Now, the absolute best thing about REITs, their superpower, really, is passive income. Get this. They are legally required to pay out at least 90% of their profits to people who own shares. That's huge. It makes them an absolute powerhouse if you're looking for a steady stream of cash from your investment. And hey, the numbers don't lie. Check this out. The value of our initial investment actually went down a little bit by about $1.50. But here's the magic. We earned almost $12 in dividends. So when you add it all up, our $100 still grew by more than 10%. That passive income totally saved the day. Okay, buckle up. It's time to talk about the wild child of the group. Our most volatile, our most controversial, and, as you're about to see, by far our most explosive contender, cryptocurrency.
Yeah, this one's a different beast entirely. It's really part investment, part pure speculation. Tax-wise, it's not great. You can't really shelter it. And the risk level, it's not just high, it's very high. Seriously, this is not for the faint of heart.
Okay, are you ready for this? Prepare to have your mind blown. Our little $100 bet on Bitcoin, after 4 years, is now worth over $650. That's a return of more than 550%. Insane. But hold on. Before you go and bet the farm on crypto, let me be perfectly clear. This is not normal. This is the definition of a lottery ticket. For every story like this, there are literally thousands of coins that have crashed to zero. We just got lucky.
All right, let's take a deep breath and come back down to earth for a minute. Let's talk about something that's been around forever. one of the oldest, most reliable assets there is. Gold. They call it a safe haven for a reason. When things get chaotic in the world, this is where people often park their money.
Now here's the most important thing to get about gold. It's not really there to make you rich. It's a store of value. It doesn't produce anything. It doesn't pay you dividends. Its whole job is to just sit there and protect the value of your money. It's less about growing your wealth and more about making sure you don't lose it, especially when the economy gets rocky.
And you know what? It did its job perfectly. Our $100 in a gold fund grew to $140, a solid 40% return. Nothing crazy, definitely not a crypto moonshot, but it was stable, it was steady, and it proved its reputation as a dependable way to protect your money. And that brings us to our final contender. Now this is a strategy that's loved by some of the smartest, most successful long-term investors out there. People like Warren Buffett. And the reason is, it's beautifully simple and incredibly powerful.
The whole idea is just genius in its simplicity. Remember how hard it was to pick that one winning stock, like NVIDIA? Well, with an index fund, you don't have to. You get to buy a tiny, tiny piece of all the big companies at once, hundreds of them. So you're not betting on one horse to win the race, you're betting on the entire race itself.
And you can see why it's so popular, right? It's super easy to get into, your risk is automatically diversified across the whole market, and over the long haul, the S&P 500 has historically given a really solid return, somewhere around 8 to 10% a year. It's just a fantastic mix of being simple and effective.
So, the moment of truth. Let's put them all side by side. I mean, look at this. It's the classic risk versus reward story laid out perfectly. On one extreme, you've got Bitcoin, the absolute lottery ticket that paid off big time. But, and this is the really interesting part, look at the index fund, the boring choice. With the lowest risk on the board, it still pulled in a nearly 80% return. It quietly beat out our individual stock, the REITs, and gold. It just proves that sometimes slow and steady really does win the race.
You know, when you boil it all down, the biggest lesson from this whole 4-year journey isn't really about which one of these is the best. The real takeaway is just how powerful it is to simply start. Because in the magic of compound interest, even a small amount, $100, can grow into something really meaningful over time. The key is just getting in the game.
So there you have it, 5 different paths. The wild roller coaster of crypto, the steady income of real estate, the solid performance of the whole market. We've laid out the real-world results from our 4-year experiment. Now the ball's in your court. Thinking about your own goals, your own comfort level with risk, what's it going to be? Where are you going to invest your first $100?